Total whipsaw. I mean, I keep starting my videos by saying what a wild day, but today really takes the biscuit. This was more wild. So we're looking at the SPY. It closed very bearishly yesterday. Remember, Bitcoin been collapsing completely, and it was my opinion that we would just keep going down. And then out of nowhere, and I did say, oh, there must be some news coming today. And I didn't think about it yesterday. And CPI data, which is probably more important than non-farm payrolls or even Fed rate decision, you could say. So it's like it used to be sort of medium importance. Now it's the highest importance. Uh, anyway, that came out and it came out at what was it, 7.7 below expectations. And therefore, the reaction is, oh, if inflation is lower than we anticipated, therefore, the rate hikes no longer have to be as aggressive as we expect. And therefore, and it's in such simple terms, and the algorithms ran with it. If inflation is lower, rate hikes are going to be lower or for not as long. Basically, it's dovish, and therefore buy stocks, buy everything. And it was obviously high frequency trading. Everything is just within a nanosecond. So what happens? The dollar gets destroyed, yields get destroyed, and just everything else goes up except for the VIX. So VIX, yields, and dollar gets destroyed. And those are the three asset classes that had just been going up whilst everything else gets destroyed over the past couple of months. So it was just a short, there's like a bear market rally, short covering, just whatever you want to call it. Those three assets go down and everything else goes up. And remember, this is with the markets having moved up a little bit, but just starting to turn. So let's start with the same chronology, same order. Let's start with the SPY. I mean, look, we closed here yesterday and then just opened, gapped higher, ran, closed at a high of day, extremely bullish above this resistance at 390 that I identified. So it's basically off to the races to some degree. Um, the next major resistance, and this is a major resistance, is 409, 410. I mean, this where we stopped just a bit above is also a little resistance, but on news, on volume, with Friday coming tomorrow, I can just expect continuation. So let's see. I wouldn't get in the way of this train. This is just bear market rally, and there's nothing more violent, and it usually lasts more than one day. So we're looking for continuation 410 on the SPY. The Nasdaq that had been very weak, and this was just looking for a flush, just one more day low, and the technical damage would have guaranteed bar some news, just total destruction, new lows, and it comes out and boom, we close basically at resistance, so a continuation, it should break through tomorrow. A lot of the tech stocks are really violently up today, so I think there'll be continuation. So, but look at that, Nasdaq up 7.5%. That's wild. I mean, that's one of the biggest short covering rallies in the world history. So that's huge. And for me, next resistance is 305, let's call it. And that'll be a very, very strategic resistance. So that'll be big resistance, just like the SPY up here at 410. The Dow Jones, which had totally been outperforming, just opened above this major resistance downtrend line, close at the high of day, up almost 4%. That's pretty big for the Dow. Next resistance is 34,000, or you could say 34 to 30, 34,300, this kind of area. Dow's getting very high. So I don't expect it's gonna remain that strong. I think if you want to stay long the market, you should stay long the Russell 2000 or the Nasdaq because it's got more room to move. The Russell 2000 also closed at resistance, a bit like the Nasdaq, because it's sort of more immediate resistance lower down because they've been underperforming. That if everything else keeps moving up, so this will probably start to test this resistance here, 190. It's a nice number. It's the high of this area, also the downtrend line, the longer downtrend line. So yeah, that'll be resistance too. But otherwise, next resistance is 195. So these zones have already been painted, so don't need to go over that really. The VIX got demolished. That was acting weird. Look at that. Open actually higher. Open green just got crushed. Touched this sort of support zone. We've already identified this sort of area 22, 23. Yeah, next, I mean, if the markets keep going up, you can expect the VIX to go down to 20 or even just below. So the circle's already there. I don't need to go over that. But basically, extremely strong markets. Um, all of this news really saved by the bell. I mean, that kind of a print on the CPI really saved the markets because they were technically ready to just roll over, especially led by the Nasdaq with Bitcoin. And Bitcoin was also saved from that because it was just algorithm based buying across the board, buy everything, and we'll go over crypto anyway. But really, total swing. So next, let's look at yields. They came lower. They already sort of leveling off a little bit, but that's all it took. Smash. That's the 1 year, the 2 year, even more aggressive, all the way back down to 4.3-ish support. 5 year breached its equivalent. Now it's going lower. We're going to test sort of, well, yeah, we're going to test sort of 3.8-ish. Yeah, probably 3.8. The 10 year, very important. Looks like it's going to come down to this sort of area, 3.6 to 3.5. So prior resistance becomes support. So I'd expect it to come down here. I should really start making some support zones, but I'll just keep it simple for now. I'll do all that on Friday. So basically around here, which suggests more downside, the 30 year about to lose its ascending support. Remember, we identified ascending support, so we broke that today. You can see that here, just totally flushed it. So I didn't draw the support on all of them, but it's obviously the same sort of chart pattern. Just totally broke down the 2 year. You can see the same thing. They've all sort of lost their support on this day. The 10 year being the most important one. So yields crushed. I'm not going to bother with the European ones. It's all the same stuff. The Italian was a bit special because of their election. The British has been coming down anyway, so back down to 3.2, probably even go down to 3 if it follows the others, because the others have a lot further down to go. So yields really came down, especially US yields, because this was a US print. So yields down, markets up. The dollar got absolutely smashed. So we can see similar to the yields, it lost its ascending support. I spoke about this. It was really just finding enough strength to bounce off this support, and this was a support zone that was being triangulated by others. So this is pretty strong support zone. Smashed all the way back down to 108. I identified this yesterday. I didn't bother with a yellow circle here because I think if we go down here, it's important. This sort of line being breached is important enough for the next level to get hit. So for me, we're going to go down to 105, not in one day, but eventually. I mean, we could sort of bounce a little bit sideways tomorrow, although tomorrow will probably be another fireworks day, but we could sort of go sideways for several trading days and then eventually go lower because this needs to test its previous resistance to see if it supports. So we could even go a little lower than 105, just like the yields. We need to go and test prior breakout. So the 10 year, for example, around here, place my little hand there, for example. So, if this is going to go lower there, the dollar's going to do the same sort of thing down here-ish. So I'm going to leave my little circle there, but otherwise 108 was identified. And to be honest, we basically settled at that zone. So markets up, yields down, dollar down. Let's check commodities because commodities are very sensitive to these types of moves, namely the dollar, namely the markets also. Right, let's check copper. We'd already been moving up anyway, but looks like resistance was nearby, but a nice big day. Let's check natural gas, which doesn't really move the same way as the other commodities because it's pretty sensitive to Europe. Oil had already lost its support, so that was a bit of an anomaly. I had a small green day, but really I just want to concentrate on gold and silver because that's the monetary commodity that would definitely react to this type of a print. So gold remember, we moved up very nicely, very strong gold. sort of just hovering around resistance. Yesterday we actually went higher, but then closed red. And today off that print, bam, all the way up here, 1760. That was the zone I identified. I didn't think we'd get there. I forgot about the CPI print, like a little bit of a novice. I just forgot about to look at the economics calendar, but I did suggest, look, if we take out this 1720, next zone is 1760. And then I said, next zone is obviously 1800. That's the big zone. But we did, just like the dollar settling at its support zone, just like yields also, we kind of closed around resistance at 1760, 1757, same thing. So let's see what happens. I think it's asking a lot for gold just to keep climbing. I think it will get to 1800. Very big zone, though. I mean, very obvious resistance, psychological number. And also by then, we're talking about gold rallying sort of 10%. That's okay, but still for gold, that's asking quite a lot. And also within the matter of several trading days. I mean, anything that goes up like this rarely just stays up there and doesn't come down. So I think a lot of people will be selling into that. Silver, now obviously the numbers have reset because the day is over, but I think gold and silver are up about the same percentage point, 2.5, 2.6%. Normally silver would be up pretty much double gold. Now silver's been outperforming for a while, but I would say it's losing that outperformance momentum. I mean, just from the candle you can see, and also this trend line I've drawn is pretty accurate. So yes, it closed above the high of the last 2 days, but it should have sort of ventured at the $22, closed around $22 to really copy gold's thrust. So I feel like silver's losing a little bit of strength, relatively speaking. After this continuation, if gold goes for 1800, I think you can expect silver to basically test 2250. I mean, that would be a big move. So, and also all the computers go crazy when big round numbers get tested. So you'd expect silver to go up. I mean, what would that be? So 3.5%. That's definitely doable in one day. We've seen bigger moves. And gold, yeah, 2.5%. So let's see. To me, silver's, it depends what happens. It depends if the dollar does not drop tomorrow, then I can expect silver and gold to come down a bit. I just feel like they're tired. I mean, they have all the reasons to keep going, but they're tired. They've had a hell of a run whilst everything else was not moving up. And now that everything else is moving up, I think a lot of the money that would otherwise go into gold and silver is just sort of parking their money in stocks, just chasing the momentum. So yeah. So yeah, I just feel like gold and silver could just lose a little bit of strength. Now let's look at the miners, because obviously they take a lot of direction from gold and silver. That's always the case, almost always, almost exclusively, but they follow the market. So the market's having a good day, you'll have gold and silver up. Look at this, 8.5%, 7.5% on the GDX. That's a huge day. I mean, we've had bigger days, and we've had bigger days very recently, but that's rare. I mean, 10% days in the miners is very rare. Obviously, the markets are crazy and we're getting big swings, so we're actually seeing those types of moves, but today is huge, and the gold and silver were not, at least silver was not up too much to warrant such a move. This was mainly gold and the dollar and mainly stocks. So anyway, let's start with GDX. It's completely taken out its resistance here of 2750, closed above it, and it's going for the next resistance, which to me is $29. So it's on its way. It's in the middle of the sort of no man's land. So for me, it can keep going up. I did trim some stocks today just because some of them got too valuable. And that's just the way I trade. I try and sort of time the top. And in some cases, I did get the top for the day for some of the stocks. But it closed very strong, just like the markets. Let's see if there's continuation, the dollar dropping, yields dropping, markets going up, then I expect this to keep going up. You just need gold and silver to go up a little bit for that. So I'm looking for a $29 test. I will be trimming some there. GDXJ, it didn't take out its equivalent, so it hasn't closed above 35 yet. So GDX is starting to outperform GDXJ. But I feel like it will. I mean, if GDX goes a little higher to test its 29, then GDXJ should at least test its 35, maybe even venture a little higher. I'm just not sure how much higher it can go because I feel like everything will be a bit tired by then. The GDX, the GDXJ will have moved up a lot. The markets will have pumped a lot. So I'll be trimming some here and then maybe 37. I guess that would be the next zone because it was sort of support here. Here we sort of most of the candles were around 37, just that one hammer there. And then it's kind of where all these candles were sort of hovering in. So we'll see. But otherwise, a very, very nice day. The portfolio was up beautiful as always. At least when the miners are moving up. I mean, some of these moves were great, but they've been like this for several days. And Goldfields in particular, look at that. It's just that's because it was no longer going to buy Yamana, some merger that was called off. So shareholders like that. But basically, we've had some big moves in a lot of these. They follow the GDX, the GDXJ, but they have their own chart. Look at this Newmont, the big dividends boys, Barrick. And then we've got sort of the little silver juniors. CDE, my favorite one, actually had bad earnings, so it's been a bit red. I'm not going to go through all of them, but basically following the GDX and GDXJ. So I basically watch the GDX, GDXJ, and then sort of time my trades according to that. But sometimes the individual stocks have their own momentum. For example, Goldfields. So yeah, I'm not gonna go through the portfolio. I'm gonna keep it nice and simple. Let's go to crypto. Let's go to crypto. So crypto, everyone had a nice day in crypto, but let's keep things in perspective. Crypto, and you see these nice big numbers, 10%, 17%, 20%, 43. Oh my God. Yeah, let's keep things in perspective because we basically retraced the flush. Totally normal technical behavior. And actually we closed at the flush. You could even say just a bit below. I mean, the day's not finished, but we're at 17,500. So although it's nice big numbers, it's kind of just retracing the flush. And this is all on CPI. Now, to me, Bitcoin has failed to identify itself lately as a hedged inflation. Okay. I mean, you could even say gold did too, right? Because everything dropped. But I think that argument is starting to dissipate a bit, the whole monetary value. But let's not get too philosophical. The point is, everything went up. That's why Bitcoin went up, but it's still very bearish. And if the markets continue to rally, yeah, you can get Bitcoin rallying, 18,000 or something. But then what? And what if there's news? What if there's more bad news with all this FTX investigation and the tests of reserves, or what are they calling this? Proof of reserves, or I just feel like some stuff will unravel and it won't take much for this to roll over again. And if it does, whilst the market's going up, by the way, that'll be an even worse look. I mean, imagine Bitcoin starts to go back down 16,000 whilst everything else is going up. Then what happens when the market rolls over? So to me, to become bullish again, to mark the low, it has to just come out and just go higher than 21,500. It's got to really create this massive engulfing candle. And what's it going to take for that? News? I really don't know. It would have to be like QE or something from the Fed, but then everything would go up. So to me, watch out with Bitcoin because this is just basic retracing back to the scene of the crime. And we could just roll over. And if we do, especially if the market's going up, watch out because this could continue to flush. And I'm going to leave these circles in place because these are, I don't know if the time zone will apply, but these are pretty accurate support zones. I don't think we'll get below 10,000 on the next flush, but ultimately, let's see what the crypto winter brings and how long it lasts. But crypto, watch out. Um, they're nice numbers, but remember, if you go down 50%, you got to go up 100% just to get back to it. So keep these numbers in perspective. Otherwise, let's do another video tomorrow. So yeah.